WEEK42, starting with the Scotiabank CFTC report. Quick look at Euro-USD positioning on the long side have been squaring off pretty much since middle of August. Price fluctuation haven't less bearish than bullish, but key remains that position is getting lighter and lighter as we are approaching November. Same can be said for pounds. So we had initially huge negative pricing, and that sort of started to stall a little bit, where price is starting to rebound recently. So there's not a lot of new information in there. A bit heavier positioning on the short side for pounds and very bullish positioning for the euro. On the AUD side, we had a bit of bullish positioning building up earlier in September. This has somewhat come off, but prices stood elevated, and Kiwi positioning is negligible. Same with most of the others. Having a look at real yields, so the blue line is real yields and the orange line is gold. It's more or less in line. It feels like as real yields are sort of stalling, that will probably keep gold capped at about 1950. You will need a bigger push in real yields for gold to start climbing as well. That's something to keep an eye on, but as it stands with the information we have now, there is not an expectation for real yields to make any significant move in the near term, and it's supposed to stay range bound. Having a look at inflation expectation, I've overlaid it with the Canadian dollar index. Generally, what I try to understand is why is inflation expectation rising. Mostly was because of oil rising recently and a lot of other commodities rising in prices that gave the inflation expectation a boost. If that were to continue, that means we're going to be moving into the 2% area for the inflation expectation, and that will give commodity currencies a huge boost. But for that to happen, we need the dollar to continue climbing down to make commodities a bit pricier as well. So this has a lot to do with USD giving way, and a lot to do for that the reflation trade to pick up. But things are moving in the right direction as it is. Having a look at the presidential polls, Trump versus Biden. Biden is having a significant lead right now. So it's a spread we are looking at. Currently, Biden is having a shy of 10-point lead on Trump, which is quite high historically throughout the year. Even looking at last year, but last year was probably less significant, where now it's more significant. And looking at it from a holistic view, it is quite difficult to imagine for this advantage to keep growing. So commodities, indices, all the other risk positive assets have been climbing because of the blue sweep narrative, easy win for Biden, and the reflation trade. But going forward, I expect the lead to kind of stall, or if not drop off, as it is quite significant already in terms of historically. That could weigh on risk sentiment going to the next week and moving towards the 3rd of November. Close these. Having a look at the calendar for next week, we're starting off on Monday. United States is on holiday, observation of Columbus Day, I believe. There's no significant news, so whatever movements we will have is going to be spillover from the weekend and from Friday. Tuesday we have interesting data for pound. We have the employment data that's coming through, and we also have the W economic sentiment from Germany. It looks like that the indicator is showing some sort of a topping formation and that growth is stalling. That should weigh on EUR JPY. Naturally will come up a little bit towards what's going to happen in risk sentiment, but it feels like Euro JPY in the beginning of the week might stall a little bit before it finds another leg, particularly around these areas in the beginning of the week. Pound will have a significant move after we know where we're headed with the US CPI. US CPI tends to have a strong move for pound, specifically GBP USD. So last reading I believe was the 11th of September, and it created a really strong leg. So it was the 11th of September, created a really strong leg to the upside before finding, so that's the August one we're looking at. September 11th was around here. So after we had the CPI read, GBP found the rest of the week quite a strong up move, near to 200 pips. Now exactly if we had a higher or lower is not certain at this point. I'll be probably waiting for data to come through. If you're gonna get a positive read on the inflation side from the United States and quite a strong employment numbers, so not as bad as expected, I would think that we'll be able to fill the gap at 1.32 around 80. So we left the gap here on the chart not so long ago, and there is scope for that to start closing in next week if the data is in line where we need it to be. And we will have, going to Wednesday and Thursday, we will have opportunities to start trading towards that. Moving on to Wednesday, we have significant market movement from Australia, so from AUD. Some interesting happening right now with AUD, where it's a little bit dislocated with reality. So by looks of it, RBA is about to cut interest rates, and initially on the 2nd of October the possibility of that was near coin toss, and then dramatically dropped. So by the 6th of October it really looked like that RBA is about to cut interest rates. You could have seen a huge dip in AUD JPY from the 2nd to the 6th. So on the 2nd we were trading around here, and so we were trading around here, and these areas are quite higher. Then we had quite a dip on the going into the 6th at the opening to reprice the interest rate cut, but after it we had quite a rally going higher. Now if I were to show you Australian 3-year yields, which is quite correlated where inflation bets are going, the correlation is showing that AUD JPY should be sitting lower. As a matter of fact, near to 200 pips lower. So I'm expecting about 76.80 level to cap AUD JPY's advance. We're going to have a little bit more clarity on Wednesday after RBA Low speaks. He's going to give us hints about if they are about to cut interest rates or not. And then a few hours after, we will have employment data coming out from Australia. That is going to shine some light as well. It's not certain if we're going to tank straight away to meet those levels and have the rate cut repricing immediately on Monday or Tuesday, but by Wednesday going to Thursday there will definitely be a tradable opportunity. Lastly, we're going to have the United States retail sales, and that will feed into the fire of what we have seen on Tuesday. So if Tuesday CPI would have been disappointed, I would have expected GBP USD to drop and the retail sales to just add to that bearishness. On the other side, if we kind of establish a quite positive and the narrative of reflation trade, then Friday retail sales will be adding to that positive fire as well. So towards the midweek we'll have a better idea. A couple of themes that are right now going on in the market is that there is a stimulus bill coming. So there are active negotiations about the stimulus bill. And to quickly show you how that reflected on the charts originally, I'm going to show you AUD/JPY. So originally when Pelosi said they are thinking about, she's open to talk about stimulus, was on the 24th of September, and almost every single chart had that V-shaped recovery after that news broke out. So continuing speaking about the stimulus bill is really helping risk assets to rally. I'm going to show you one of the indices as well. So this is the Nasdaq. Again, the 24th found the bottom. That's the day that Pelosi announced that she's open to talk about a stimulus bill. And same thing for other indices as well. So it was quite the turning point on the 24th of September. And as long as there is a hope for that is open, you should find that the rally finds legs higher. But if stimulus bill falls apart, if there's no stimulus bill coming, then you know where prices will return to, and possibly even lower. That's across all the risk assets that rallied because of that. So if we were to falter on ADJPY, coupled with a rate cut bet, we can see moves beyond 200 to 300 pips emerging. But that's something that is a risk off event, and it will happen out of the blue. That's not something we can see on the calendar just yet, but something to keep an eye out throughout the week. And that's everything from me.